Hello and welcome to Clarity for SEO. Today, in this session, we will discuss the important guidelines that RBI has published with respect to standalone primary dealers, or in short, you can say SPDs, right? So it was there in the news. So RBI recently raised the liquidity facility limit for SPDs. Okay, and this can be a potential question in any regulatory examination, including your RBI as well as other SSC or banking examination. All right, so just remember that what's the limit raised, okay, what was the earlier limit, and in what are the conditions, what are the purposes behind which such limit has been raised. And apart from that, we should also understand the key concept behind the SPDs, standalone primary dealers, what are primary dealers, what are bank promoted primary dealers. Okay, everything we will look into it, right? And some important terminology that we will also discuss regarding the SLF, okay, repo rate. So everything we'll try to cover in this slide. So just be with me for the next 10 minutes. We will definitely clear each and everything, and at last I will provide you some brain teasers questions that you have to answer in the comment section. So the first announcement, the RBI latest announcement regarding the standalone primary dealers, you can see here that RBI has increased the aggregate limit available for standalone primary dealers under the Standing Liquidity Facility from 10,000 crore to 15,000 crore. So the new limit effective from 2nd of April 2025 is 15,000 crore. All right. For whom? For standalone primary dealers. Under which facility? Under standing liquidity facility. So what is this standing liquidity facility? Don't get confused with SDF. That is different thing. Standing deposit facility is different thing. Here it is liquidity facility. So it is a borrowing tool actually, where SPDs can borrow fund from the RBI at repo rate. All right. We have in the standing deposit facilities, here the banks used to deposit their excess money that they have, excess fund into the RBI. All right, to get like to get interest rate, to earn interest rate without any collateral. This is SDF. Okay, it is a tool. When we will discuss about the RBI and its functionaries, roles and functions, then such type of tools are being discussed. However, standing liquidity facility, it is a method to provide liquidity. Liquidity to whom? Liquidity to stand-alone primary dealers, where they can borrow the funds from RBI at what rate? At the prevailing repo rate. At the repo rate, right? So borrowing under this facility will continue to be at prevailing repo rate. Means it should not be fixed. Rather, it depends upon the prevailing repo rate. Individual SPD limits will be communicated separately. That what would be the limit for any particular individual SPD, whether it is NBFC or banks promoted SPDs, right? So that will be communicated separately later on. All the other terms and conditions remain the same. So these are 2-3 effective changes that you need to remember. Will be effective from 2nd of April. Limit raised from 10,000 to 15,000 crore, and the borrowing facility will be available at prevailing repo rate. All right. Now, prevailing repo rate. Then what is? Do you understand by variable repo rate? So it is a liquidity management tool that allows the banks to borrow fund at market determined rate, usually lower than repo rate, because it is market determined. So generally it is lower than the repo rate. Here RBI wants to provide liquidity to the banks. Okay. So banks actually, group of banks, they used to determine that at what rate we should take money from the RBI. So that's why it is market determined. It is not determined by the RBI, rather it is market. And obviously when it is determined by the market, which consists of banks as well as the other financial institutions, then it must be lower than the repo rate. All right, so it is generally lower than the repo rate. If repo rate right now it is 5.5%, then it would be like 5.49% or 5.48%. All right, so this is variable repo rate. It is generally lower than the repo rate, and it is up to 14 days. Up to how many days? Up to 14 days. Repo rate is short term. Okay, but it goes up to 14 days. Marginal standing facilities. These are the facilities that allows the scheduled commercial bank to borrow overnight fund from the RBI against the government security. Means there must be a collateral involved in case of marginal standing facility, and these facilities are being availed by the banks to meet their like short-term liquidity mismatch. All right. Here, the commercial banks borrow for overnight purpose from the RBI against the government, usually at rate higher than the repo rate, and it is usually higher than the repo rate. In fact, 25 basis point higher than the repo rate. Okay, if repo is like 5.5%, then it will be like 5.75%. All right. Now, coming to the next slide. What are the reasons behind which RBI has taken such decision with respect to SPDs? See here, obviously, in order to increase the liquidity, so aims to enhance the funding access to whom? To standalone primary dealers without impacting the government securities market significantly. This is the key purpose behind this decision by the RBI. Recent related reforms for SPDs. See some of the reforms that has taken with respect to the SPDs recently before this guideline actually. So RBI has allowed the SPDs to participate in all repo operations, in all repo regardless of tenor. What would be the tenor? No matter. Rather, they can now apply, they can participate in all the repo operations. Previously, SPDs could only participate in overnight liquidity operation and variable repo rate operations. Okay, but now they can participate in all the repo operations. This also you need to keep in mind, because in multiple statement questions they can ask it as one statement, right? Role and importance of primary dealers. We were reading all about the primary dealers standard. So what are their roles? The exact function of primary dealers: buying and selling of government securities. They are the one who used to create market for the secondary market actually, right? So in the primary market they used to buy and sell the government securities, so they are called primary dealers. They're the first one who used to deal actually at primarily they used to deal with the RBI, therefore they are called primary dealers. Okay, so buying and selling of government securities, they act as a market maker and underwriters in government security market. Okay, they buy and sell the government securities. They actually determine, the underwriters used to determine the valuation of government securities. So they became the market maker in respect of government securities. They contribute to price discovery of government securities, secondary market, liquidity, and broader investment participation. They serve as a conduit for RBI open market operation, where buying and selling of government securities actually took place in OMO, right? Buying and selling of GSEC, right? So they serve as a conduit for RBI's open market operation. This is the tool of RBI in order to manage the liquidity into the market. All right. So primary dealers का ये काम समझ में आ गया. Buying and selling of government securities. They serve as a market makers and underwriters of government securities. They discover the price of government securities. They function as a secondary market, provide liquidity into the secondary market, and provide a better avenues for the investors. All right. Now, see the classification of primary dealers. The first one is standalone primary dealers that we are talking about. All right, major changes from 10,000 crore to 15,000 crore. All right, and the second one is bank primary dealer. Bank primary dealers. So these bank primary dealers, okay, they are basically the departments or subsidiaries of banks. However, standalone primary dealers, they are either the subsidiaries of scheduled commercial bank or they are NBFCs. SPDs are NBFCs focus exclusively on government debt market. See here. Okay, incorporated whether in India or abroad, but they need to be registered with RBI. So two types of SPD we can say. The first one either the subsidiary of commercial scheduled commercial bank, and the second one is NBFCs incorporated in India or abroad but should be registered with RBI. All right. So standard primary we have already dealt with this. Buying and selling of government securities, deal in government securities, support and develop the government security market. All right. So market maker, underwriters. See the privilege which the SPDs are enjoying. Privilege given by whom? By RBI actually. First one, access to standing liquidity facilities at the repo rate, eligibility for refinancing operations and collateralized borrowing, and access to primary auctions of government security negotiated dealing systems and RBI's electronic platform. Okay, so these are some of the privilege enjoyed by SPDs provided by RBI. All right. Now, coming to the next slide, the key functions of SPDs. First one, obviously, underwriting the government securities. SPD bid for and underwrite the government debt at auctions, provide a cushion for government borrowings by ensuring that auctions are subscribed even in adverse conditions. That auctions should be completed even in the case of adverse, because primary dealers are there, na? They are going to buy the remaining government securities at the time of bidding, right? Second one, market makers buy and sell government securities in secondary market, offering two-way quotes. Either you can buy or sell to the investors. Okay, two-way quotes to the investors actually helps to maintain the liquidity and price stability into the market. The third one, participation in RBI monetary operations. So SPD participates in all type of repo operations, open market operation, liquidity adjustment facilities everywhere as a conduit of RBI's monetary policy transmission, or we can say OMOs, right? Promoting wider investor base, obviously SPDs promote the government security market among the retail investors, individual investors, the foreign investors. So the base of investors are being increased because of SPDs. Okay, so they used to promote that these investors, the retail, institutional, or the foreign investors, got promoted to invest in government securities. Oh, all right, in government securities. So these are some of the key functions. You can take the screenshot in order to refer it. See here some example of SPDs in India. ICICI, Morgan Stanley Indian Primary Dealers Private Limited, Nomura, PNB Gills, SBI DFHI Limited. These are some of the standalone primary functioning in India. And bank primary dealers, you can see here, Bank of America, Bank of Baroda. These are the departments and subsidiaries of the banks functioning in India, Kotak Mahindra, Axis. All right. You can remember 1, 2 as an example. See here the difference, the primary difference between the SPDs and bank primary dealers. See, SPDs, legal structure, NBFC is registered with RBI. However, bank primary dealers, departments or subsidiaries of banks. Activity focus, primarily government security market. However, they, apart from the government security market, they need to do their banking operations as well. Okay. Access to RBI fund through standing liquidity facility at prevailing repo rate, and here they can access the RBI fund via liquidity adjustment facility, marginal standing facilities like other banking operations, banking tools, right? Regulatory norms, NBFC norms will be applicable. However, primary dealers guidelines will be applicable upon the SPDs. In case of bank primary dealers, bank norms will be applicable under the Banking Regulation Act of 1949, and primary dealer guidelines will be applicable. So these are the key differences between SPDs and bank primary dealers. All right. Now, coming to the next part of the slide, here I'm giving you some questions, and you need to answer each and every question. Even if you know the exact answer, then also I want each and everyone to move your fingertips and just write down in the comment section the correct answer, numbering it 1, 2, 3, and 4. The current aggregate ceiling of SPDs, here you have to answer it. At what interest rate SPDs can borrow from SLF? Which the following is not true about the SLF for SPDs? That also you need to answer. The fourth question, the extension of SLF and repo participations for SPD align with RBI broader strategy of, what is the RBI broader strategy for this announcement, right? The primary role of SPDs in India's financial systems, and which of the following institution is not eligible to become SPDs? These are the 6 questions that you need to answer in the comment section. And at last, here RBI mentorship and test series program is running at our C4S platform. You can enroll into that in order to get the complete syllabus covered by RBI by our mentors for phase 1 as well as phase 2. Sectional test as well as full length test are being there. Complete QRE classes right from basic to advanced level. Then we have test as well, full length test over phase 1 as well as phase 2. You have then current affairs sessions, the analysis sessions, in which we used to taught you that how to use the current affairs in your descriptive writing, what are the potential questions that may appear in your examination from current affairs in phase 1. Everything we used to discuss here. And apart from that, we also used to provide you miscellaneous current affairs, okay, because we can see 10 to 15 question from here also. So that's all for today, my dear students, and the price of the course is 2499. All right, you can enroll here in order to get benefit for your upcoming RBI examination. That's all for today, my dear students. Bye bye, take care, see you soon.